Hello, Karina, are you there? You're on mute, Karina.
We are a digital payments management toolbox serving enterprise customers, helping to digitize mobile money and cash workflows and improve the quality and security of those workflows for our enterprise clients. We currently serve 9 countries in sub-Saharan Africa, and we're growing fairly rapidly.
All right, thanks. All right, so in today's event, we'll be looking at banking innovation, banking APIs, payments innovations, mobile money, data privacy, and payment gateways and integration. Before we move on, I would like to inform everyone that this event will run for 1 hour and 30 minutes. And at the end, we'll have a 30-minute Q&A session where all the attendees will get the opportunity to ask any of the speakers questions that are relevant to today's discussion. And while the event is going on, I would like to suggest that if any of the attendees have questions for the speakers, it would be wise to pose those questions as quickly as possible so that at the end of the event, we'll quickly go straight to those questions. All right, so Karina, let's talk about banking APIs. I know you've been in the banking industry, financial services industry for quite a long time now. Can you talk to us on how open banking APIs enabling innovation and interoperability between banks and fintechs?
Sure. I think you have to think of APIs like bricks and mortar banking outlets, right? So the banks did a couple of things really, really well back in the past few decades. One of those is build trust, and the other is get branches out to as many places as they possibly could. APIs function in the digital universe the way that a bricks and mortar bank branch functions in a shopping center or a town center, or even near the offices of a corporate enterprise like one of the tea factories. Those APIs extend access to financial services, whether that's through a third party, just like you would when you put a bricks and mortar bank branch on site at a corporate facility, or through direct access to bank customers through the web. So regardless of whether there are additional people involved, like for example, when Bionic integrates to banking APIs, what it means is that our existing enterprise customer base now has the opportunity to walk through that virtual door into that digital bank branch and bring our customers and bring our business through to that financial institution. The same as having an additional bank branch would have done so in decades past. So open APIs have a huge role to play because they reduce barriers to access and entry. In a digital universe, the barriers for keeping out unsavory or not credit-worthy consumers and protecting financial institutions from those sorts of bad actors, they're digital. They're technical barriers. They're not physical ones. So open APIs are like open doors into more bank branches.
Awesome. And Asif, do you have any views on that?
Yeah, I would just add on to what Karina just mentioned. I think open APIs is the future of banking. And just to add on to that, about 6 months back, even before the COVID hit the world, we used to educate our customers to plan for a world, especially for banking and financial institutions, that by 2030, there will be no brick and mortar branches for banks anymore. So how are banks going to offer their products and services to their customers? And that's where this digital economy based on open APIs comes in, where the cashless society incorporates these banking APIs. Banks and financial institutions, apart from being the physical walls of cash, will now be opening up to more fintech providers and open APIs, so that people can use those APIs to have a lifestyle kind of banking there. And I think one more important factor is that apart from the openness of those APIs, it is also very important for the underlying network, which is the banking and financial institutions, to securely enable those APIs for these fintech companies to be able to offer those secure, reliable, and scalable services, which the latest millennials as end users are demanding these days. So I think that's the future of banking. That's the future of digital economy, and open APIs will constitute the majority of the digital payments ecosystem of future.
Thanks, Asif. And Asif, given that there are so many new players now coming into the financial services industry and then offering different products, how can collaboration with fintechs help financial institutions and big techs post COVID-19, looking at payment innovation?
Great question, Osita. And I think the in fact, the pre-COVID situation, banking and financial institutions started realizing the importance of open APIs, of fintech, and the technology ecosystem which is building around us. Just to share certain statistics, there are almost 800 plus fintech providers currently available in Africa, and the pace of these new fintechs coming into the business and starting up their operations is almost increasing at 60% year on year. And that's about $500 million of fintech industry we are talking about just in the African peninsula. So I think the landscape and the ecosystem is already there. The demand and the requirements are already there. Banking and financial services institutions have played a very orthodox role in terms of embracing the change and supporting these fintechs in the last 3 to 4 years. However, that is changing now. These banks and financial institutions have realized that they cannot compete with this large volume of fintech innovation that's taking place around them. And that's when these banks have now started investing in the technologies and their enablement and capacity to embrace this change and start offering services in collaboration with these fintech providers. And I think the most important element here is that these banks are still in that phase where they have to figure out how to enable their internal backend secure systems. How do they expose that through open APIs, through scalable open APIs to these fintech providers, so that these fintech providers can offer more user-friendly services. And as we have been working with almost 100 plus banks in the region, what we advise and what we observe from these banking customers is that the biggest impediment for these banks to open up for these fintech collaboration is their internal readiness. The banks still are figuring out how to, or which systems to have in place in order to securely, reliably, and scalably expose their internal core banking APIs, core banking functionality, or their end customer data in a secured manner with these fintech providers, so that they can capitalize on that and start offering innovative payment services or ancillary services for that matter as well. If we look at the banking industry and such, I think banking industry is evolving. So banks are not will not continue to be the vault of cash anymore, but banks are evolving as a lifestyle banking. So they're not only offering the cash related services or lending services, but they have started offering complete value added services. So if a person wants to buy a property, if a person wants to buy a car, not only the banks are able to give them the loan or the financing, but the banks are now also offering them the catalog of property with preferential rates on those properties to those end customers as well. So the banking is evolving from the typical bank definition to more kind of a lifestyle banking. And in order for the banks to effectively do that, they have to embrace this change from fintech, and they have to collaborate with these fintech providers to offer these kind of lifestyle options to their end customers.
Thank you. Karina, lucky your camera is finally working.
Yes, sorry about that delay, gentlemen. I couldn't really add much more to what you've just said. That is precisely the barrier and the opportunity, which is internal reticence. How do we ensure security, transparency? How do banks become comfortable with a digital environment? And once that hurdle is overcome, the opportunity is exactly that. When we're talking about WhatsApp and Facebook moving into value transfer systems and financial service provision, it's lifestyle. It's about the ease of moving value around so that it supports what customers and businesses need to be able to accomplish in their day-to-day.
Thanks. And Karina, look, let's talk about mobile money. And
sure.
We've just like Asif has said earlier, a lot of these players are coming into the financial services industry, and there's huge opportunities. However, mobile money is there, and especially predominantly in Africa. But I would like to hear your thoughts on mobile money. Why should mobile money be considered a banking service other than a need-based transaction channel?
Yeah, I think it piggybacks neatly off of what I just said, which is that banks are a lifestyle decision moving forward, and so is mobile money. I think mobile money in many ways was the first iteration of that in this part of the world. Mobile money appeals to people who are not going to be able to access bricks and mortar banks, which is the sort of reputational challenge that banks still face, as they are perceived as not being accessible. Mobile money made an effort to be accessible to physical and socioeconomic sections of society that previously had been excluded from anything but a cash economy. And that's only going to continue. So as we move from feature phones increasingly to smartphones, it's about value transfer. It's not about cold hard cash or vaults of money. And mobile money has proven itself an effective tool for facilitating value transfer that is lifestyle based, right? A Nokia feature phone doesn't restrain where I can transact relative to where I, grow my business. So if I am a cattleman and I need to be able to transact, I don't need to move myself physically. And mobile money facilitated that before anyone else did. So I think it's a perfect example of what we were just talking about. It will not be the only example in the future, I don't believe. I think that it will fill a role for a time, and it will continue to be one channel through which people manage and move value in order to facilitate their lives and their needs and their business activities. But it will become one channel and not the only alternative. I hope it remains a strong one, because I think it's penetrated some very exciting and interesting sectors of society and the economy. But it definitely has competition, and that competition is going to grow as access grows, and as the expectation around a product like mobile money mirroring or resembling cash and flows resembling cash, that will not always be the case. For the generation who's grown up with mobile money in lieu of cash, the parallel, the familiarity that mobile money gives you relative to cash won't be one that is a necessary experience for people to feel comfortable transacting and moving value around. So yeah, the future is wide open, and I think mobile money is kind of the tip of the spear. It'll stay a big part of the solution for a very long time. But depending on how mobile money evolves and how the rest of the sector chooses to evolve, and at what rates, how significant of a part of the future solution that remains, I think we still have to see that.
Yeah, Osita, I'll just add on to what Karina mentioned. I think I have a different perspective on mobile money, because I feel mobile money is just an alternate mechanism of payment, and this will evolve like that. I think there is a big gap, especially in Africa, where the banks have not been able to penetrate or reach the masses. And mobile money, by virtue of telecom networks, have enabled that alternate payment mechanism to that underbanked segment of the society, to utilize and get hold of those value-added services from these fintech providers as well. And we are seeing that lots of non-traditional, non-banking and financial institution players like Apple as a handset manufacturer or WhatsApp as a chatting application now started doing the payment services as well. And we'll be seeing this more oftenly and more candidly in our region, because there is a big opportunity where we have underbanked people, where the banks are unable to serve them through their typical account offerings. And the gap between a typical mobile money and a banking money, in my opinion, will diminish in very near future.
Hello, Rocky. Welcome. Thank you for joining us.
Thank you, Osita. How are you?
I'm good, thank you. All right, Rocky, I'm going to go straight with you, and I want to talk to you on data privacy. And so I would like to hear your view on data privacy from an African perspective. Are we able to measure and demonstrate compliance with global data privacy regulations, looking at all the different applications and businesses that are dependent on data?
I believe, yes. Africa is in a position to be able to measure. We sort of have a chance to leapfrog and go to the latest, whereas the rest of the world is faced with legacy as we sit currently. Africa has got the opportunity because we had not put much infrastructure on the ground, so we've got the chance to actually leapfrog and be at a position where we start building with the customer in mind and with the data in mind, in terms of how we actually look after the data, what type of permissions we get from the customer, and what we then do with the data from the onset. The issue is that it could be a bit expensive, Considering where we are coming from, we are mostly utilized to manual, but we basically need to become basically intelligent driven organizations, and we basically need to leapfrog and utilize the current technologies that are currently there that takes us to that space. Thank you. Osita, can you hear me?
I'm sorry there, my network is kind of giving me a headache now. Okay, so thanks, Rocky, for that insight and perspective. I want to talk to Asif on payment innovation. Asif, are you there?
Yes, I'm here.
Yes. Okay. Asif, can you give us your opinion on banking innovation? What are banking customers' top priorities, and are these growing demands within the space increasingly falling outside the traditional banking realm?
Right, Osita. So I think, Osita, banking innovation is right now the hottest topic amongst the financial institutions and banker these days, especially post-COVID situation where that was a realization for the banks that how this pandemic has expedited the digital transformation journeys for their customers. And there are different kind of banking ideas and innovations which can be implemented, but I think the biggest realization for these banks were that they had to invest in a internal capacity and the technology or the platform in order to quickly launch new services and embrace these fintechs which are coming in. And I'll give you a small example that one of our customer, one of the largest banks in Middle East, who is a CR2 customer, they had a very typical new customer onboarding process. And this was a typical eKYC process where if a person is interested to open a bank account, they would, instead of coming or walking into a branch, they can just download the mobile application, scan their ID documents, their passport, their salary certificate, do through KYC steps, and then eventually open up a bank account. However, in post-pandemic situation, what they realized was that there was a new customer segment or a customer demand where there were several citizens and residents of the country who were locked outside the country. And these people who were not able to travel back had their families and businesses at home where they were not able to support them from a financial perspective. So they had to pay their utility bills, they had to pay their water bills. And if they are not in country, how do they really serve that? So this particular bank, which is a CR2 customer, they actually came up with, and we helped them in terms of devising a mechanism where we extended that eKYC process for those citizens and residents living outside the country to complete that onboarding process, create a new account for the bank, top up that bank account with funds, and they can do the online payments for their water bills, for their school fees, for their electricity bills online. And the interesting part here was not the idea itself, but the time of execution that the bank took to completely launch this service was simply amazing. The bank, because they were relying on a stable state-of-the-art digital banking platform like CR2, they were able to modify the eKYC process in literally 10 days time and launch that service. On the other hand, their competitors were still Now, after 3 months, they're still struggling in replicating the same service with their legacy systems. So I think the most important realization of COVID-19 for these banks is that while the banks have the ambition to do lots of innovation and they want to collaborate with fintechs, they want to do some very unique services. However, these banks are not internally ready to securely work in collaboration with these fintechs. Another statistic that I would want to share here is that in general, in Africa, there was a recent study which said that in order for a bank to onboard a fintech service provider, it takes at least 3 to 4 months for a new fintech provider to be onboarded from a commercial perspective, from integration perspective, from testing, beta testing, and then rollout. Now, just imagine that if a bank is taking 4 months to onboard a single fintech provider, that means that in one single fiscal year, they may not be able to offer more than 4 fintech services. And this slowness or this lack of efficiency is basically the biggest hurdle these days for these banking providers to innovate that quickly. And I think the COVID-19 situation has given them the realization that they need to invest in their internal systems so that they should be ready to onboard these fintech providers, not in a month of 3 to 4 months, but it should be a matter of 3 to 4 days so that they can quickly roll out new services and embrace this fintech ecosystem as well.
And what would you say is the contributor to the slowness of onboarding new fintech products?
Right.
Is it infrastructure based or?
Yeah, there are multiple factors. I think the biggest factor there is, and initially this used to be a resistance from banks to open up. If we look at 3 to 4 years earlier, these financial institutions and banks were very reluctant to open up their internal data, their internal systems, their APIs to these fintech because they always felt that these fintech providers are a competition. And I think as the industry is maturing in the last 1 to 2 years, these banks have started realizing that they cannot innovate themselves everything. So they have to collaborate with these fintech providers because these fintech providers have invested in technology building and in the human capital, as well as they provide the unconventional banking wisdom, which these bankers and financial institutions most of the times lack. So first of all, that realization that yes, we need to open up. But once that realization came, they hit another wall that, oops, we are not ready from our systems perspective. So now they are opening up and investing in those systems to expose an API in a secure manner. And it's not just security aspect, but it's also about the monetization. Because once you open up an API for a fintech to consume, how do I as a bank or how do I as a financial institution would monetize that exposure of my APIs? So the banks are going through their learning curve as well. And if you look at some of the leading digital banks globally, maybe in Singapore or in Europe, they have created those SOPs and processes where they can quickly onboard a new fintech service provider, both commercially, from a technology perspective, from testing perspective, and safeguarding their data and their customers' privacy as well.
Thank you, Asif. And Karina,
I couldn't agree more. I think, yeah, I was just going to say, like, that is exactly the thing. And it's a mental shift because, and this is a word picture from a novel. Get more of the pie that is financial services for people and businesses on this planet. It's recognizing that we work together to make the pie bigger. There are 7 billion people on this planet. Capitalizing on making sure that really needs to happen. The tech and how that gets implemented is obviously critical, but it starts with a shift in mentality of there's a pie that is, you know, financial services for the world, and I need to get as much of it as I can, and I need to protect my slice. When we work together, the pie gets bigger, and it's how we monetize that in a way that is fundamentally collaborative, as opposed to isolationist, because we're not going to grow a digital financial ecosystem for the planet, which is what we need to be able to do, by being isolationist. We're going to do it by being collaborative. And the tech that can enable that will only be invested in once that shift has happened in the minds of the decision makers.
Thank you, Karina. And Rocky, do you have a comment on that?
I definitely agree with both what Asif and Karina are saying. I think it's a time for very collaborative engagements in the industry, because you'll find that fintechs are not coming for the bigger pie. They're coming for specific innovations in a specific point of the value chain. So they could come in, for example, in channels, in providing different types of channels. And because they're providing the specific channel, it's not that the bigger players need to develop that tech for themselves. They need to leverage what has been developed already. So it's the ability to leverage, and you not spend more money in research and development when something has already been created, but how do you incorporate that capability into your value offerings? And how do you work with the fintechs to enable you to do more for the customers? And through that way, the fintechs then grow as organizations in a specific value point in the value chain. And that then helps the whole industry growing, and gives certain capabilities in certain sectors a growth mindset as well.
And tell me, Rocky, what is Microsoft doing infrastructure-wise to enable all these different financial products scale their services?
Microsoft, we are platform organizations. We provide the backbones to most of these technologies, and we are also enabling most of these new fintechs in order to be able to build up on that. So we provide the backbones to, for example, mobile money. We provide the backbones to the various channels, WhatsApp and things like that, that then come up. So we are a platform organization, and we let the various innovation in the industry take advantage of that platform in terms of Azure, in terms of the data center, in terms of data and AI, in terms of IoT platforms, and many others that do exist. So we are basically a platform company, and we work with anyone.
Right. Thanks. Just a quick reminder for the audience, if any one of you have questions for the speakers, please post them now so that they can answer those questions as soon as the event is over. And now moving on to payment gateway, Karina. I know you and Steve, you guys are in the banking services industry, and you offer a lot of banking integrations for most merchants, and e-commerce is really a big deal now, especially in Africa, and so can you tell us from your experience how are payment gateway providers dealing with fast-moving new payment methods that are continually coming up? Hi, Karina.
Yep, sorry, can you hear me?
Yes.
Yeah, so the challenge with payment gateways is always around whether or not you're going to require specialized hardware. The rest of it is relatively straightforward in terms of how it can be resolved. In Kenya, we're handling it a little differently because Safaricom is a particular kind of market player. Then, for example, it's being handled by MTN and Airtel in Uganda, or by Vodacom and Tigo in Tanzania. The most flexible, most versatile, lowest touch, lowest barrier to entry technology, whether that is digital or involves some piece of hardware, is the one that wins the day. So where we see options for SaaS and software applications that can be used on any smartphone, any simple techno Android interface, those are going to be picked up the easiest. However, there are always concerns around fraud and security, and that's where having a robust approach to building security infrastructure, digital security infrastructure, is so key and so critical. It's one of the reasons why some of the initiatives in various sub-Saharan African countries around national identity databases and exposing those APIs is so important, because it's the way that we can protect and increase the ease of access for e-commerce and for merchants who are dispersed.
Thank you. And Asif, do you have a comment on that?
Right. Just adding on to Karina's point, I think how we see merchant payments evolving is that I think especially in Africa, we are seeing a lot of transformation projects where banking institutions and merchants are moving payments from their POS terminals or card-based terminals to mobile applications. And I think there is an increasing drive from banks to replace these physical POS terminals with virtual POS machines, you may call it mobile applications, through NFC payment, as well as through mobile vouchers as well. And we as CR2, we have been seeing a lot of queries from these banks, because that actually not only reduces the cost of doing payments, but it also increases the security element, where you really don't need to distribute control on those physical POS machines, whereas you can easily secure that on a mobile application. The other thing is also about the trust thing, and I think for merchant payments to gain momentum from a volume perspective, there has to be a back-end trusted network. And unlike some of the mature markets like in Asia or the United States or the Europe, in Africa, what we have observed is that consumers and masses are still reluctant to do online payments because of maybe comparatively increased rate of fraudulent transactions as well. And I think that's where that active role of financial institutions and banks come in, to give that credibility for a financial transaction or a merchant payment gateway, that this is a secured payment gateway. And once that trust is there, I think then there can be so many new innovations. For example, we just completed a rollout in an emerging country, Georgia, where the use case was that it's a tourism-based country, and lots of tourists used to come into the country. And the first thing when you go in a new country, what you do is that at the airport, you go to exchange and change the currency, the cash currency there with the local currency. So one of the banks there, they collaborated with a fintech provider and powered by CR2. They actually offered a service where they have a wallet service with QR code payments, which are deployed across all the local merchants in the country. And then as a tourist, once you come in, you just top it up with your MasterCard or a Visa international card. So really, you really don't need to carry cash. You have a local currency in terms of wallet, and you can just walk on into any merchant with your wallet application, and you can pay that through your QR codes. So, this is the kind of innovation that these fintech collaboration brings to the table for the typical banking and financial institutions.
Thank you, Asif. We are coming to the end of this event, and just to take one more question, looking at banking innovation, do you have any particular or identified digital banking transformation trend post COVID-19? And which are the most important trends that we should look to take action on in the next 12 to 36 months? Asif.
Sure. I think COVID-19 is the most critical thing that has happened to financial services, banking, and payments industry, because I think that's just the last push the banking industry needed to put their act together and start offering some unique digital services. If I have to narrow down two or three things which will be of prime importance post COVID, is I think first of all the customer experience of these financial institutions and banking in terms of their channel applications. People are still reluctant to go into the branches, and in the last 3 months we have seen that this has become a behavioral change in people. So even once things open up, people would continue to encourage to use these digital channels. So the banks and financial institutions need to invest in terms of optimizing their digital customer experience. Plus, they also need to open up into APIs so that whatever innovation these fintechs have invested in, they can take benefit of that. And I think the third most important element, which we'll see over a period of time, is the use of technology in typical banking and financial institutions and products. The disruption which is coming up from non-banking and non-financial institution players, that will be the biggest impediment for the banks to invest and start offering unique and innovative services to their customers.
Thank you. And Rocky, you're raising your hands.
I just wanted to come in and talk to the transformation of the financial sector. The way I see it, it comes in 3 areas. Basically, post-COVID, how do you respond? In other words, how do you navigate the now? The next thing is recover. How do you plan for your comeback? And the last but not least is reimagine, which is the shape your new normal. And when we look at the first arrow, which is respond, we are looking at financial institutions looking at empowering their employees through teamwork and the ability to work from home. We are also seeing the managed risk across the organization, and we're looking and seeing them deliver differentiated customer experiences. So how do we, if we are not going to be in touch with the customer, how do we get in touch with the customer, and how do the customer respond to our services? Another key issue is combating financial crimes. So there's a lot of fraud and all those things that are happening, and how do they respond to that? So we're seeing that is also key, and also modernizing their core systems and payments. And I think this links in with some of the things that we're talking about financial institutions teaming up and collaborating mostly with fintechs on certain portions of their value chain. All right, and when we start looking on the recovery side, we see them diversifying their customer engagements, and this they can do seamlessly deliver critical services through digital channels to efficiently and cost-effectively meet evolving customer needs. Another key thing that we are seeing is gaining insights, right? And this they can do by migrating structured and unstructured data into the cloud to optimize engagements by identifying latent customer needs and emerging trends. In terms of security and compliance, how they can protect customer and citizen information, utilizing digital identity and security controls, the stuff we were talking about POPI earlier on. And obviously sustaining growth. How are they becoming agile organizations so that they respond faster, cost effective, and easily deploy new customer experiences at any given point in time. All right, so that is on the recover. On the reimagine, we are seeing them scale new commercial channels, bringing in things like mixed reality, voice, connected devices, and subscription services to drive lifetime digital engagement. So those we start seeing. On gaining insights, we are seeing visualizing of real-time customer insights to identify trends and automate personalized engagements at scale. Use of knowledge mining and cognitive services to drive new enhanced products and service offerings. In security, establishing comprehensive long-term strategy to proactively detect and defend against security threats. You walk into a bank, if you've ever had a crime, the bank already knows. Those types of things are coming. And obviously, creating new revenue streams by creating through maybe your engagement strategies, and both existing and more. So there's a lot happening in the innovation space, and there's new technologies coming in the banking space as well. We never thought would come in. Thank you.
Yeah, Rocky, that was so beautifully broken out into those very specific sort of phases. And I want to speak to our angle on them, which is we are a fintech company that focuses on SME financial services. And what that means for us with COVID is making sure that for every single one of our SME customers, we are the business continuity toolbox that they can access and rely upon in order to ensure that their access to all of their various financial institutions comes through one trusted source. So for us, it's just about ensuring that those links are strong, both on the technical side and on the relational side, that they remain accessible and that they remain secure. Yeah, because very few things have ever rocked the world the way COVID-19 has, and hopefully we won't experience too many more of them in our lifetimes, but we're not sure, right? And so ensuring that we as a fintech company that serves as a link between businesses, including other fintechs, and traditional financial institutions, being a strong portion of their business continuity planning so that these kinds of shocks are less damaging and can enable business to continue to be resilient, to take a breath and then carry forward and actually move from strength to strength. From our perspective, as a fintech serving SMEs, that's the goal, is to lessen the shock between the SME sector and the financial institutions so that they move from strength to strength together in a secure, safe way. Oh, CT, you're still muted. We can't hear you.
I'm sorry. Okay, so, thanks, Karina. We now move on to the Q&A session. We'd like the attendees, whoever has questions, to wave their hands, and then we'll give them the opportunity to speak live with any of the speakers. The attendees, it's a wake-up call. If you have questions, just wave your hands, and then you get the opportunity to speak with this, to ask your questions live. Okay, so we're not, unfortunately, we're not getting any question from the attendees. So we'll just move on, and can we ask the speakers to give us a closing comment on any of the topics we have discussed today: banking innovation, banking API, payment innovation, and data privacy. Would you like to start, Katrina?
Sure, I'm happy to start. One of the missing players in this panel is the regulator. The elephant in the room is, how do we do this in such a way that keeps people safe and keeps us on the correct side of the law when the law is moving and it's a changing world for them too. So having strong relationships and having open-minded, curious, informed regulators is super critical. And it's something we don't always talk about because it can be a little bit of a hot potato, but it's something we need to be talking about because it's important. And I think we all want the same thing. So bringing them into the conversation and making sure that they participate in the conversation in a spirit that is collaborative and forward-facing. It's important. We need to pay attention to it.
Okay, just before we move on to the next speaker, we have a question from Emmanuel Chubukati, and he's saying, he says, speak to cost when adding up all these players. I'm not sure what, Katrina, if you can make sense of the question, or perhaps we should give him the opportunity to speak live. Emmanuel, would you like to ask your question live?
Well, thank you for the opportunity. Mine is just, you know, I'd like for the panelists to speak to the impact of cost on the end consumer when you're talking about, you know, the customer's money is in the bank, sorry, the business's money is in the bank, then you have a fintech ahead of it, then you now have another company on top of that, and then ultimately the money goes all the way back to the bank, because that's where it is stored by both the customer and the business. So it's an entire chain and everybody's taking a cut. So I'd like for the panelists to speak to cost in this regard.
Okay. Would you like to start Asif?
Yeah, I'll answer that, Emmanuel. I think, Emmanuel, it's a very, very good question, I would say, because what we have seen, and I'll share some experiences from what has happened in mature markets where who went through this fintech collaboration, and the banks are now willing to open up, and they are working very actively with these fintech providers. And I think the cost model, and when I say the maturity of banks and financial institutions, the realization that comes in is that they cannot charge the same amount of fees and money that they used to charge in their typical conventional banking product, because as more fintech players are becoming part of the single equation, then everybody has to chip in order for the overall end user price to remain competitive. And that's a simple, you know, volume game. And I'll give you a small example or a statistic that, you know, these banks used to typically spend anywhere between $300 to $400 on an average, to open a new deposit account or to sign up a new customer in a conventional banking model. The same banks are now, with the help of digital transformation and technologies and these fintech providers, they are able to open up a new bank account digitally, literally in just $20 or $25, and in some markets that's further coming down. So what's happening is that that cost of doing conventional business is going down, and so is the volume of business is increasing as well. The same principle applies to the service charges and fees as well. As more and more players will come into a typical transaction, the per player share of that transaction will go down, but eventually everybody will make more money because the volumes will substantially increase there. So I think it's just a matter of time, and that I think fintechs are playing an important role in building those business cases and justifying that in front of banks and financial institutions, to lower that pricing for those typical transactions as well.
Thank you, Asif. Rocky, you wanted to make a point on that.
Yes. Basically, what I'm saying, fintechs are coming in and looking for areas for which increase margin to them and basically allow them to enter the market. So they look definitely at the cost driver when they come in. And basically, when they create the technology and embed this technology, despite it being done at a cheaper price, they're also distributing it to multiple financial institutions who also now all share in the upkeep of the fintech, allowing it. Allowing financial institutions to actually lower their margins drastically and offer value to the customer. That's the trend. That's actually, I think that's the reason why fintechs are being successful in the industry. It's because of that innovation that they're coming in. They're identifying cost areas in the value chain that can add value to the customer, and they develop that technology, bring it back, share it amongst multiple banks, therefore lowering the cost of doing that business for the actual financial institutions and lowering the cost for the end customer in the end. And that's the simple equation that they're bringing into the table.
Thank you, Rocky. We have one more question from Bruce. We're gonna let him speak live. Hello, Bruce. Bruce, you're muted.
Yeah, hello everyone. Thanks for the presentation. I had posted my question in the Q&A. So I was asking for a yeah, thank you. For a country like Ethiopia, which hasn't gone much further in mobile payment, online payment space, my question was, what do you say is a low-hanging fruit for a country like ours with minimal mobile payment and fintech solutions, considering that all stakeholders now in the country are trying to move forward and trying to become innovative in providing solutions in this arena? Thank you.
If I can take that question, Osita. So Brock, that's a very valid question. And I think the way I've been working with certain banks and other institutions in Ethiopia, so I have that firsthand knowledge of what is happening on ground. But what I can say is that because of the compliance and central bank's regulation, the way forward for Ethiopia is to have more fintech in collaboration within the country, and that collaboration has to come from the banks. I wouldn't go into too much detail, but I think the political and the government will right now, and the push from the central bank to the banks to open up their APIs and start offering new services like mobile money, like mobile wallets, bill payments. That's something which is the lowest hanging fruit right now for the country itself. There's a big opportunity because for Ethiopia, 60% of the population is unbanked. So there is a big opportunity for the banks to start offering non-typical, non-banking products like mobile money and mobile wallets to capitalize and penetrate to that 60% of underbanked population. The reason why I feel that it's the lowest hanging fruit is because for a wallet account, the KYC requirements by the central bank are very lenient or very less. And I think that should be the sweetener for the fintech, for the banks, for the central bank, for the government, and for the telecom operators to collaborate and facilitate these kind of mobile money and mobile wallet services. Just for your information, there are already 6 or 7 mobile wallet services which are running in the country. However, still we are seeing 60% underbanked population, which means that there is a disconnect in terms of what is being offered and what is the requirement and the demand by those population. So that gap needs to be identified. I feel that those fintechs can take the lead role here in terms of picking up that niche, filling up that niche, and helping banks reach out to those 60% underbanked population there.
Thank you.
I agree so much with you, Asif. That makes so much sense. And where that gap, where that disconnect occurs, fintech in Ethiopia and banking institutions in Ethiopia have a unique opportunity to kind of to cherry pick from best practices and global solutions globally, because access from outside is limited, right? So you own the market, you can pick best practices, import them on your terms, and hit that disconnect right where it's sweetest and where you can maximize growth and access. So I think you guys are in an incredibly exciting space right now. And the rest of us are kind of watching and really excited to support and help and get involved. But you're the leaders in this space right now, 100%.
And Rocky, you want to chip in?
Yes, I think for Ethiopia, they can take advantage of the cloud service providers. We are seeing a lot of fintech innovation hosted on cloud platform like Azure. All you need to do is go to the marketplaces of these cloud service providers and search for the technology you're looking for. It's already available globally, despite where the fintech might be based. And you can easily take advantage of that and enable in Ethiopia. It's as easy as that.
Thanks very much, Rocky. That's all the questions we have now. And so we should just move straight to the closing comment. We've taken closing comment from Karina. So we take from Steve and then Rocky.
Thank you so much, Osita. I think I've summarized this before, but the opportunity for fintech providers, for banks, for financial institutions to collaborate is now, and the banks need to realize that they need to revamp their internal technology landscape, their internal systems now more than ever to embrace this collaboration. Otherwise, I think we have seen disasters in some of the other industries when the industries did not evolve themselves. There were some outside disruptors which completely disrupted that industry. We don't want banking and financial institutions to go through that as well. However, this is the time, and I feel the COVID-19 situation has given these bankers and financial institutions the kind of board level sponsorship they need to progress their budget agenda for digital and technology innovation. So this is the time. We just need to capitalize on that.
Thanks. And Rocky?
I think each and every organization, whether a fintech, a financial organization, you need to start operating from what we would call an intelligent-driven organization. And as a digital advisor, I help organizations do this, basically navigate and help you envision a roadmap for your future state. We do this through ideation, developing business cases, and prioritizations. We also help with launchpads to anchor execution, help with agile developments, AI practices, and obviously data modernization, and also operationalize the business value. We also do minimum viable products that we can help you take to market. So thank you for that.
Thank you. This is getting exciting. While we're trying to round off this event, we have one more question from who? From Ayana. So we'll let Ayana speak live. Hello, Ayana. Ayana, you're muted. Yes. Hello? Hello, Ayana, can you speak now? Okay, Ayana is unable to speak, so I just read out her or his question. It says, thanks for such insight. And my question is, what are the fintechers thinking about those who can't read or write? Any optional way to bring those illiterate people into this technology?
I just love this question. Can I respond?
Yes.
So there's such interesting data around the ability of folks who are illiterate to memorize USSD code chains and response sequences. So we know that folks who didn't get any formal training in reading or writing, they can still be numerate, and they're able to easily identify really long, complicated series and sequences of numbers and symbols in order to transact or to make a phone call or to buy airtime or to send mobile money. So on the feature phone side of things, simplifying those sequences is crucial, making sure that we can reduce those codes, and even using AI voice prompts, etc. There's amazing technology, even with Google Translate, etc., to simplify and make verbal and audio on a feature phone in order to work people through some of the services that are available. Then when you open the world of smartphones up, we're moving towards visual and spatial tools already. So that, again, to maybe use an overutilized term, that allows us to leapfrog to a place where a spatial or a visual organization scheme or process, even if something as simple as moving, you've approved your payment with your thumbprint and then you move the green dot into the green bucket or something in order to approve the transaction going forward. Those are simple ways to make what is heavily dependent on large, complicated sequences of numbers or a lot of text, simple. And that brings a whole lot more people into space. And This is going to be a data-driven solution and a UX-driven solution. It's about combining what we know from use patterns, which we have a lot of data, and giving designers freedom to work outside of conventional boundaries from the user's perspective, as opposed to from a conventional, how do we replace sequences of numbers and series of letters with a more intuitive experience for the user.
Thank you, Karina. Sif, would you like to, okay, Rocky?
Accessibility in all forms. So it could be blindness, it could be hearing, or has become a major input, especially for us digital advisors, in terms of the digital transformation we drive, in the sense that where does whatever you produce in the end has got accessibility to everyone. And we actually bringing it in some of the ideation sessions. We actually do it upfront, such that the people know we are doing this with inclusivity in mind, and we are not leaving everyone out. And that, we've noticed, takes a much larger uptake, even for those people who do not have any issues with accessibility, in terms of easy of use and the whole acceptance of it, whatever it could be, if it's an app or an interface or whatever it can be. So it's become quite big in the industry in terms of driving use cases, no matter what you're developing.
I think I'll just add on to it. I think from our perspective, there are two ways of this question. One is for people who are not physically challenged, but they may not have the opportunity to get themselves educated. So how do they really access these digital financial services? I think we have done multiple projects where through the mobile banking application or the internet banking application, there are certain voice commands where, and this is especially for catering for the first segment where people are not educated, so they really can't read and write. But then the voice command based systems can actually guide them in doing those financial transactions, payments, and utilization of services. On the other hand, if we go on to the another variation, which is already being deployed in certain countries, is use of voice assisted bots. So, for example, Siri or Alexa or Cortana or Bixby on Android, where you can have a conversation with that voice agent. And do your financial transaction and payment as well. So in that case, you really don't need to go through an application or read or write or anything as such. So that's one way of doing that. The second part, which is how do we enable physically challenged people to take benefit of the financial services or digital ecosystem. That again, so many innovations are happening there as well. So, for example, people who have eye issues, they have an application which actually vibrates, and they have a vibration code for doing certain actions on those devices. Similarly, there are certain dynamic colors which are also shown on the mobile application or the web portal to facilitate people who have certain challenges. So I think there's so much from technology perspective. There is so much innovation which has already been done, and I think this now remains with the fintech providers, with the banking institutions, to start using them in order to serve this segment of the customer base as well.
And we have one more question. We'll let Juet ask the question live. Hello, Juet. You're muted, Juet. Hello, Juet. Okay, I think Joyce is asking, is your product Fintech or its other? So I'm not sure who this question is directed to. I don't know. Do you like to take the question, Asif?
Yeah, I'll just comment on that. I think we may not be patronizing any particular fintech provider here. So I think in general there are so many providers there, and again you have to pick and choose on which service is good for you, for your banking institution, and you know you are the best judge on what do you really want from the fintech collaboration space.
Thanks. Okay. And just one question from myself. I mean, so just as different banking institutions trying to provide services for those with disabilities like impaired eyesight or hearing and all that, how do you give them kind of security on their banking services?
Right. I think the it is far more secure in these times because from a fingerprint authentication perspective, from certain PIN code perspectives, not only that, but there is new technology where the way you hold and behave on your mobile application or your mobile phone, it actually the application can intelligently detect whether you are the legitimate user or not. So I think there are so many additional technologies these days. Again, it just depends on what is your customer base and what kind of or what level of services you want to offer them. And I think technology is already available there.
Okay. Right. Okay. That's it for this session. I want to thank all the speakers for taking the time to come out and speak to us and share their views. I would like to ask the host of Innovation World to close this session.
Yeah, sure. Thank you all. Thank you all the panelists, for your time and, making this session exciting. This is the first time, we have allowed the attendees to interact with the panelists. And we really think that, as much as, live interaction is important, I think, that will always make the session meaningful. And yeah, I mean, this is it. And we do miss one of our panelists, Mr. Mark Young. Unfortunately, he couldn't join us because of some issue with electricity in his area. So that is something that we would like to mention to all our attendees and the panelists. Also, we'd like to mention that our next session will be on 1st of July, which will be focusing on global fintech. And the details will be shared accordingly with everyone from our team. Okay, we once again like to thank you for your time and making it exciting. Thank you.
Thank you, everyone. Thank you, Karina. Thank you, Asif and Rocky.
Thank you.
Thank you. Bye-bye.